Hello, this is Edmund Shing, Portfolio Manager at BCS Asset Management. Today we're going to look at the weekly global strategy slides, focusing on the US stock market. Risk, well, volatility has eased back. In terms of earnings forecasts, the sectors that look best are technology, insurance and media. Technical analysis points to further rebound in stock indices, and in terms of sectors, performance-wise, healthcare and banks have led the rise in the US and Europe. So on volatility, here on page 4 we can see that again it's really come back a long way. After hitting a spiked up to 26, it's now back at under 17. I think this can fall further back to the former range between 16 and 11. So maybe some more downside for implied volatility and therefore upside for stock markets. In terms of comparing earnings and price for US corporates, well, firstly let's look at the macro outlook. The leading economic indicator for the US, I think, is bottoming out and starting to rebound, judging by this chart on page 6. Looking at earnings versus price for the whole SnP 500, the green line represents the forward earnings trend, and yes, it has dipped a little bit, but the price in black has corrected a lot more, suggesting there's more upside potential in the short term. The sectors we like the best from this point of view, comparing earnings and price, are firstly technology. For the same reasons, the gap between the black line and the green line, we think the black line will move up closer to the green line, so that means price going up. Same story, in fact more important story here in insurance, where the earnings trend has been very solid, and also same story again thirdly in media. Very solid earnings story, quite a sizable correction for the media sector, and it's only partially retraced back up for the moment. Further to go. So stocks are rebounding. If we look here on page 12, this line represents the percentage of stocks on the New York Stock Exchange above their 200-day moving average. And this has hit the lowest level in 3 years recently. Currently 39% of US stocks are above their 200-day moving average. Again, we think that this will recover further, suggesting more upside for the stock market. In terms of performance by sector, well, in the US, interestingly, over the last 1 week, the best performer has actually been pharmaceuticals and healthcare, which is not the usual rebound you would expect from a stock market recovery. Otherwise, same story, technology, transportation, media, the more cyclical side and the more high beta side of the US index. In Europe, one of the best performers, interestingly, is the banking sector. This is interesting because at the end of this week, indeed on Sunday, we will see the results of the European Central Bank's asset quality review of 130 European banks. Recent reports from Bloomberg suggest that some 105 European banks passed this test, but 25 banks are marginal or failing the test. So we'll see on Sunday the exact results. Conclusion then. We think implied volatility can still move down in the short term, closer to the old range. We see a long-term turn in stock market index potentially, but we see a further bounce in store. Don't forget the seasonal effects are now positive as of the middle of October, suggesting stocks can go higher. And finally, in terms of sectors, technology, healthcare and insurance all look particularly good to us at the moment. This is Edmund Shing from BCS Asset Management saying thank you for watching and goodbye.